Hello everybody, welcome back. Let's have a look at some of these coins. We're going to look at Bitcoin, we're going to look at Ethereum, an overview of the crypto market, and I suppose a little bit of a brief introduction with the Dixie. Oh yeah, and obviously I've set a new crypto bot up, and it's in a way a hedge against whichever direction it's going to go. So I'll have a look at that at the very end as well. So basically the Dixie is pumping, and when we look at this Dixie chart right now, I mean obviously it'd be easy to say, well, it's bearish, but to be honest with you, it really isn't bearish right now. We can look at it in two ways. We can look at it as in fundamentally, why is it pumping? I'll probably argue that despite the Fed printing money, which is supposed to sort of drive it down, there's been a bit of a turbulent situation going on in the rest of traditional markets. So when people sell stocks, they sell it to cash. When things get sold to cash goes up in value, and that's basically a very rude and crude version of really what's going on with it. Now, when and if confidence enters the market, I'm not talking about cryptocurrency. I'm talking about major indexes, Nasdaq, S&P, Dow Jones, even things like gold, everything like that. They're all having a bit of a hard time at the moment. It's very difficult for an analyst, not that I am one, they're all arguing amongst each other. What is actually going to happen? So the best thing we really have is to look at the chart really and work out what's going on the chart. So you can look at this in one way really, which is it's in an uptrend. It's in an uptrend, and it's actually going through these supports like these resistances like knife through butter. We've got a conversion baseline here above the cloud, Chiku span is above the price action, so that in a sense is confirmation of an uptrend on this. So we've got a confirmation of an uptrend on the dollar index. Now we could measure this from here to, I suppose, here, and see if we can get some kind of pitchfork tool. There is some kind of relevance to it. It's not particularly good, but there is, which would suggest that this could be resistance at the top here. Now, if that one doesn't work, and again, pitchforks aren't, they're not the best thing in the world. You could measure it from the last bit down here to the top here, and have a look at this steeper uptrend, which again, is very steep. And it also works. We've got two pitchforks that we could possibly use to gauge support and resistance, but again, I'm more inclined to look at it in the way that with or without these, which basically don't really help me that much in this instance. It's an uptrend, alright? So we should have been, or maybe could still even be rejected around this level. This was the area where I thought that there could be some kind of rejection, and to be honest, we almost were. We're kind of overreaching at the moment, I would say. However, we are in an uptrend. Now, the reason I'm boring you to death about the dollar index is that if the dollar goes up, traditional markets, anything that's pegged to the dollar, and remember, Tether is pegged to the dollar, and most people trade cryptocurrencies with Tether pairs. So if Tether technically is going up in value, which sounds crazy, but it technically will be, then anything that's pegged against it is going to be going down by default, just by the fact that Tether is going up, which sounds ridiculous, but it is. It is. Tether is going up. So that is basically the deal with the Dixie. So if the Dixie continues to rally, what we've got to look at now is supports and resistances, or mainly resistances really. Supports aren't really offering us much, so I would probably say that the top of this blue or this purple box zone is the next area of resistance, 93.3 or 93.4. If we continue to pump, this is where we're going to go. A continued pump or continued move up with the Dixie will bring everything down, but should hopefully get rejected here, which should then add a relief rally. Now, anyone who's watching this video, I'm assuming you're in cryptocurrency, you will have noticed that we've been beaten up today pretty significantly over the last, well, this is going on for a little while now, hasn't it? Since the peak over here, we've retraced to the tune of 18%. Sounds not that much, though, doesn't it? It doesn't sound that much when you think about what's been going on and the fear that's amongst everything. Yeah, it's not actually that much, because over the last couple of months we've retraced on two occasions 30%. This was a 30% retracement, this was also a 30% retracement, so this is only 18, which does make you wonder if it could possibly drop any more. Given what we've just looked at with the dollar index, it could drop more. Now, if we're looking at this on a historical time frame, just recently, or I suppose recently, I mean, the last times we had kind of decent pullbacks, we bounced from either the green 50 exponential or this purple moving average, which is the 50 moving average. So tagged it here, double bottom, move up. This one we didn't even get that far, and we moved straight back up. Already we have touched the 50, and the green is just below here, also at the bottom of the Bollinger Band, suggesting that, you know, we should at least have a relief rally around this area. So this area is between well, it's just below 50,000, so not far from where we are right now. A breakdown below here could end up being pretty nasty. We'll take it to the weekly to understand where it could go down to. And we've got this other way of looking at it, which is that, yes, when we had these pullbacks, where did we come down to on the weekly? Well, you could argue that this is the 10 exponential. You could probably squeeze the 9 in there, so I'll probably say the 9 exponential, if we was to have it, would have caught that one there. Again, we didn't quite make it here, but we are breaking down below the 7 moving average. So between the 10 and the 7 really is pretty much going to have it. Breaking down below here could end up being pretty nasty, and that brings us to roughly about 47,800, we'll call it 4,800, 48,000, sorry, get my words out. So on the live stream that we were looking at a couple of days back now, at the weekend, we were talking about, you know, the RSI on the weekly having bearish divergence, which it does, and we were thinking and hoping that we would get confirmation of that with a further tick of this RSI, but obviously, you know, given the way that this week is already panning out, we've not had that at all. So we're already going down. Doesn't mean that we can't spring back up. We certainly could, but this is bearish divergence. Normally what you'd expect is 3, 3 and you're out, and this could be the 3rd, and it didn't even come up this far. So that is concerning. We also saw this on the 3 daily too. So 1, 2, and technically 3, and down. So, you know, this ended. You know, I'm not saying that this is the end of the world. You know, it could end up being a further retracement. So that is basically the deal with Bitcoin. It could go either way. One thing we've always thought about and talked about on this channel is this money flow index, and the money flow index coming down to touch this trend line, 1, 2, 3, and technically whenever it touches it, I would say that this is a very good chance that this would be the Bitcoin bottom. Doesn't mean that it will be, but there is a trend formed here on the money flow index, and I would expect that, considering it's so nice and structured, that this would be where the Bitcoin bottom is. Now, saying that this is where the Bitcoin bottom is only saying that this is where it is on the money flow index. It's not saying where it is price wise. So we always keep our eye out on this one in the event of these pullbacks. If the pullback becomes more severe, if we end up coming down by another 15%, which is, you know, it's definitely likely, we'll have to have a look at this. We'll always cast our mind back to the money flow index on the weekly, see where we are, and see if we've touched or tagged this trend line. And that would give you a rough idea, in my opinion, of where the Bitcoin bottom would be if we're not already close to it already. So we've got moving averages to look at, which, like I say, the weekly has not been tagged yet. That 10 exponential has not been tagged, which it could easily be. And if it were to come down to that from where we are at right now, that would be another 8%. So kind of close in a way from the 30% that we're used to seeing, but just not enough, is it? It's only, yeah. So like I say, this could get worse if we came down to what everybody expects, which is the 20 moving average. That's a 40% retracement from the top to the bottom there, 42% retracement, and that again is not the end of the world, but that does bring us to the $35,000 area. So not the end of the world, but yeah, it's definitely something to think about. I imagine there's a lot of new people. Well, I know that there is a lot of new people in cryptocurrency that have been in this, you know, because I have always traded with caution, because I've been trading and dealing with cryptocurrency for several years now, since 2016 really. I was properly into it, so I know what it can do. I've seen it. I've seen the pumps, I've seen the dumps, so I'm always very cautious and try to be conservative about what I expect. I'm not saying we're going to collapse massively. I'm not saying we're going to pump massively. It's just a range, a cryptocurrency range, which we're used to seeing. But there's a lot of new people that I would imagine have never seen anything quite so devastating as a 40% retracement. Never mind an 85% retracement, which is something that I have obviously seen. So you can go back and look at that on, previously. You can go, well, that doesn't look like much. Well, I can tell you something is it was pretty significant when you're around for it. It's definitely not that I was holding it. I did sell around here, and I waited patiently to get back in around here. But I can tell you now, if you've never experienced something like that firsthand, and you're looking at it on a chart, and it looks like a little blip, that's not a blip. That's over a year's worth of consolidation to the tune of 84%. So when you see little things like this, and I call them little things because they are little things. To see people panic and flutter and just go crazy about it. I mean, you've not lived yet. I'm afraid you've really not lived. Now, the one thing I have to say is that as far as the market cycle is concerned, time is with us on this one. We might go into a period of consolidation now, and it could bring us down to wherever this may be at the time. Remember, this is weekly; it goes up every week. So we might not end up at 36,000. We might end up at 38,000 or 40,000. Depends how long it's going to take for us to consolidate, really. But If that were to happen, so be it. But the market cycle is due to continue in a bull market for the rest of this year at least. So I'm not overly concerned. And as far as a lot of my positions, well, all of my positions are still significantly in profit. I don't mind riding some of these out, if not most of them out. So anyway, that's Bitcoin. Like I say, I wouldn't worry. I wouldn't get too concerned. We've seen a lot worse than this in the past and recovered. Even if we go back here, when the market cycle technically started to pick up again, we rallied all the way up from about 3,500 and all the way back down to 75%. And then look, don't worry. It worked out because the market cycle's in our favour. And like I say, when we look at this, this is the weekly, but if you ever look at it on the monthly, it gives you more of an idea of, I suppose, how scary this could possibly be. We don't often see candles open and close outside of Bollinger Bands, but we certainly have seen one here. And I normally, would say, and I do say, when you see a candle body open and close outside of a Bollinger Band, but the rules of Bollinger Bands are that they want, price action wants to be reabsorbed back into that. That's the rule of it. 95% of price action is supposed to take place within a Bollinger Band, and it certainly hasn't done that for this entire month. So these are all things to consider and not be worried about, but also respect the fact that we are in a bull market, and if we do come all the way down to 36,000 or maybe even lower, we could come down lower. Look, where's the centre of the Bollinger Band on the monthly? 16,000. These are possible targets. The market is in our favour. There's no, in my opinion, disputing the fact that Bitcoin is overvalued, but I don't want to scare anybody by saying that. There's no disputing that it is overvalued, but just because it's overvalued doesn't mean that it can't go up any further. It was overvalued back here, wasn't it? $20,000. It was overvalued there, definitely. Is it overvalued here? Well, no one really knows particularly, but I would say that it probably is. Not to say that it can't pump further from this level. It could. I mean, I expect it to reach higher highs this year. But I'm like, what I'm saying is, technically, it is a bit overvalued. But that's that. So we're going to have a brief look at the way that Bitcoin dominance looks at. But before we do, we're going to have a quick look at Ethereum. So this is the Ethereum chart versus Bitcoin, and this helps us understand what the situation is with altcoins, because this has the largest market cap. So if this is bullish, or if this is holding steady against Bitcoin, then there's every chance that altcoins might rally or at least survive to a reasonable extent. Now, this is going back to 2020. So we'll have a look at 2020 here, where 2020 started for Bitcoin. And Bitcoin, remember, we're thinking about this in terms of who's strongest, how's it worked out. Now, what we see here, 2020 here, COVID dump, and then a massive rally. Now, we see something. This might not look better, but it is relatively constructive. So we've got 2020 dump, and then we've got these little mountains that keep building over time. So one, little one, bigger one, bigger one. I would expect if this were to continue this way, we would actually get a bigger one. We've also, not that it's worth a great deal, we do have a conversion baseline over here, so we talk about this, I suppose, on my channel very quite frequently. When I bring this chart up, like I say, I use it kind of as an indicator, for altcoins, rather than just looking at it as Ethereum, but as altcoins versus Bitcoin. And because there's structure to it, I like it. So, I've been beating around the bush for a little while about setting bots up and things like that, because I was never really, since this, because if you've watched my bot journey where I made $50,000 from an initial $1,000, the market was very, very, very heavily in my favour, and my strategy worked to deal with that. But since all that kind of came to an end, I've kind of been scratching my head looking for a new strategy, because the market has been a little bit unsure really. The alt season is technically still in play, as the Bitcoin dominance is relatively low still. It doesn't really know which way it wants to go, and that has hindered me in setting up bots for any kind of long period of time until it picks a direction. It's been very difficult to set up bots outside of the ones that you could set up for a week or two. But now I feel as though, in a situation like this where Bitcoin could go either way, and Ethereum is on this trend line or just below it, because we've come below it before, that this might be a good opportunity to set up a bot for a long period of time, which would probably, in my opinion, I'll keep this bot on for the rest of the year, which sounds ridiculous, but I will. And it's a boring old Ethereum Bitcoin bot. Now, it's only just started about an hour ago. Doesn't look very special at all, and I'm not expecting a great deal of profit from this in the short term. This is my hedge against the direction it wants to go. So if Bitcoin comes down and Ethereum comes down, don't be fooled in thinking that this chart will plummet all the way to the ground. This would only happen if Ethereum literally dropped like a stone against Bitcoin. It would have to drop 2 or 3 times faster for me to come out of range here. So this is why I'm not expecting a great deal of profit from it. But it's a hedge. It's my hedge against the direction. Whether it goes up and Bitcoin goes up and Ethereum goes up, that's great. If it all goes down, then that's also good for me too, because I do expect by the end of the year that everything's going to pick up and it'll be rosy again. So it's quite a reasonably sized investment of about 0.3 Bitcoin here. And again, like I say, it's only been going for 3 hours. It's been going for 3 hours, and it's not done a great deal. I'm not expecting it to, but we're right in the middle of the range here. And again, if Bitcoin decides it wants to drop by 40%, that's fine. All of my investment is going to drop by 40%, so I might as well profit from it being in the bot. I've got a lot of grids in here, and I can sustain big pumps, big dumps, and still be in range. And I will leave this for the rest of the year, because if there's one thing that's almost certain of the market cycle, that the two most highly liquid, largest market cap tokens you can get, Ethereum and Bitcoin, are at least going to do better. They're going to reach new all-time highs by the end of this year. So it's a kind of a win-win. They'll profit on the way down, they'll profit on the way up, and basically it will end in profit. One way or another, I will end up in profit. So I just thought I'd bring that to your attention. A lot of people wondering why I've not set bots up in a while. It's because the market has not really offered me any opportunity. Now I feel like there is an opportunity, and the opportunity is because we've touched this trend line, peaked just below it, and it's a long-term bot. This bot is going to go on for a very, very long time. Well, technically, another 7, 8 or 9 months perhaps this bot is going to be running for. So you can only imagine what the profit will be like over that period of time. Normally I speed up my bot profit by having small condensed grids. Not this time. There will be more bots that I'll be setting up when the time is right, but for now I think I'm going to try and play this trend, whether it breaks down to like it did last time to the tune of it broke down about 17%. That's no big deal, because if we have a look at my bot here, I can sustain a 17% drop, can't I? No problem at all. In fact, I've got a bit of a comfort zone of 25% drop I can sustain against Bitcoin. It's almost certainly not going to do that. I don't want to tempt fate, but I'd be very surprised if it did drop by that much against Bitcoin. Anyway, I will leave it with you there. So at the moment, like I say, we are in the middle of a range. We could easily come down by another 15, 20%, maybe even a bit more. But for the moment, I do feel as though if we look at Bitcoin on the daily, there is a strong chance that we do have a little bounce from here, a relief rally, could even bring us up to these zones here. If you see all these moving averages are converging into each other or crossing into each other, that's a very strong resistance, all between the areas of 54,400 and 55,700. So if we do get a relief rally, it's going to take a monumental push to break it above here. And if Elon Musk tweets one more thing, it's not a good thing when he does that. It's really not. I appreciate what he's doing for the space, but any move that's driven by a tweet is not an organic move. It's just not. It's a pump move, and what we don't want charts to be broken and pumped. We want them to mature, whether that's if it takes a downtrend first to then mature to go back up, or if it just matures naturally and just goes back up. Or to have pumps, driven off FOMO, which is what it is. It just damages the chart overall. I'm not a fan of it. But yeah, I like what he's doing, so I'll give him all the respect in the world. At the end of the day, what he's doing is actually, it is good for Bitcoin. But yeah, it's just the silliness of the way that people just jump on the back of things and then get wrecked, and then the short stack and blah blah blah. I'm rattling on anyway. This isn't a live stream, this is a normal video, so I should try and button up and stick to the point. So that's the deal. We're in the middle of the range. We could come down further. We have to look at the weekly chart in order to really get a scope on that. Coming down to this would easily satisfy me for a much better and more significant bounce. Breaking down from there would be pretty severe and be the shakeout of the decade, perhaps. Maybe not the shakeout of the decade, but it would be pretty severe. A lot of people, like I say, have not experienced a decent shakeout before. They think they have, but they really haven't. They really, really haven't. Anyway, thank you for watching. I hope you have a nice day or a nice evening. Take it easy.